I'm going to turn my camera off when we start. Just,
I didn't hear what you said.
Yeah, I'll shut my camera off when we start.
You're good to go.
All right. Is Facebook Live up and going too? We'll assume it is. Good morning. I'm Paul Markle, Executive Director of the Barrie Chamber of Commerce. I'd like to thank you for joining us today for this session on a tax discussion. For many of us, that's a fantastic thing, but for Nancy, it's bread and butter. And again, as per usual, we start with a land acknowledgement. In keeping with Indigenous protocol and building respectful relationships between Indigenous and non-Indigenous peoples in Canada, it's customary to acknowledge the traditional territories and ancestral lands of the Indigenous peoples. The Barrie Chamber acknowledges the sacred land on which we operate, which has been the site of human activity for 15,000 years. This land is the ancestral land of the Wendat, the Anishinaabe Nation. The treaties that were signed for this particular parcel of land are the Williams Treaty, Robinson Superior Treaty number 60, the Penetanguishene Purchase number 5, and the Nottawasaga Purchase number 18. We are dedicated to honoring Indigenous history and culture, and we also recognize the enduring presence of Indigenous peoples on this land, and we're committed to moving forward in a spirit of reconciliation and respect. Miigwech. So lots of small business owners operate as sole proprietors, and we typically get a lot of questions from clients on how this works. So today we're going to look at some of the differences in taxation between a sole proprietor and an employee, as well as how to report business income on your personal income tax return. Take a quick look at a sample tax return with the goal of a little bit of an understanding of how it all works, and maybe there's something in here that you didn't know that will apply to you. We're also going to take a look at what to do to minimize your tax bill. No one wants to pay too much, so let's look at ways that you can keep your tax bill as low as possible. And then we'll have some time for questions and answers once that's done. So joining us today is Nancy Stabek. Hopefully I didn't butcher that. Did I get it right?
That's good. Good.
Good. Is it Stayback or Stabak?
Stabak.
Stabak. Okay, good. And she's a local business bookkeeping, accounting, and tax professional who helps small business owners navigate the challenging financial and tax compliance requirements that they face. We starting with Paget Business Services, which is a franchise operating in Canada and the United States. Nancy owned and operated several small businesses, providing a unique perspective on the needs of her current clients. I think it's always important that you have an understanding of what happens in a I don't want to say like in a real business, not that a tax business isn't real, but to understand what business owners go through. Originally from Beaverton, Nancy purchased her first business with family members and operated a small restaurant. And 4 years later, after the sale of her first business, Nancy went on to run a larger food service location for another 12 years. At this point, she began working in a local accounting office and decided to go with her own Paget franchise, Paget Business Services, specializing in small business bookkeeping, accounting, and tax work for small business owner-operators. Nancy began working at Paget in 1998, purchasing the franchise location in Aurelia. And in 2014, she partnered with Andy Gubbles and acquired the Barrie location as well. So during this time, Nancy has served on the Business Enterprise Resource Network Board. We're actually in the former site of the Business Enterprise Resource Network location here at the Chamber now. Was here for 6 years, and then on the Paget Business Service Advisory for 10 years. She also taught accounting on a very part-time basis at Georgian College, and her franchise has been in the Paget Business Services Leadership Club for 12 years in a row. The focus of Paget is to work with small business owners to help them not only get this messy task out of the way, but to help understand what it all means. So we have a similar kind of a background. I was 27 years in working for McDonald's in the restaurant business, and it's amazing the amount of accounting and bookkeeping I had to do in that particular role. And then, having my own business for a while, you quickly realize what you're good at and what you're not. So I think having a solid, bookkeeping partnership, along with a tax lawyer, are generally really important connections to have. So we're going to do about 25 minutes with Nancy, and then come back with some Q&A. So if you have any questions, please put them into the Q&A button at the bottom rather than the chat. We'll leave that clear for just communicating and housekeeping. And then we'll come back and we'll answer your questions. So without further ado, Nancy, take her away. Thanks.
Okay, great. Thank you very much, Paul. It's great to have that introduction. just wanted to kind of maybe do a little summary of the typical client for us as well, that I had not put into that introduction. You know, we've got all that knowledge and experience and all that great things that we've been doing, but a typical client for us really is a small business owner operator that's been working in their business and maybe doesn't have the time or the inclination or quite often the skill set to keep up with all of the trainings and the education and everything you need to do to make best use of tax deductions and strategies that suits their own needs. So that's where we come in. So as Paul mentioned, the topic that I wanted to cover today is tax, and tax can be a pretty complicated word, and it can be confusing because there's so many types of tax. So we've got sales tax or HST, there's payroll tax, there's corporate tax, there's estate tax, capital gains tax, and there's even a road tax. All of those add into the complexity of the whole word tax, but what we're going to talk about is personal income tax. And as Paul mentioned, we're going to demonstrate the look of what two different tax returns look like, one from a self-employed person and one from an employed person. And I set up the examples so that the numbers are all the same. We're just looking at that tax structure. Now, as we go through the tax structure, I also wanted to take a look at how a tax return is oriented and maybe be able to make that connection between how the tax works and how much tax refund that you may or may not get at the end of the year. Also wanted to set up a few minutes on how to set yourself up for success to minimize your own tax. I've also included some tax tips that I pulled off the CRA website that I wanted to share with you. And I also have a Paget newsletter that I've got it's got some good information, not just about your income tax, but some general business information as well. I'd like to share that with you. And then, as Paul mentioned, hopefully we'll have some time for some questions. So if you take down any questions that, any thoughts that arise, questions, we can address that at the end. And hopefully we can clear up any confusion you may have with regard to your own tax returns. So before we look at the tax return comparisons, I just wanted to start with a couple of assumptions. So because tax is not on any level a simple topic, for this presentation, we're doing the very simple illustration thought process here. It's not, pardon me, taxes are very individual because there's so many things that affect us on an individual level that we can't get into all of those complexities in an illustration. So we're going to go through a scenario where we have one example where the tax return individual is an employee. They make $50,000 a year. They do $2,500 as an RSP contribution each year. They've got $1,000 in medical expense. So pretty simple. This is not about uniqueness of tax returns. This is just illustrating how they work. So the other example we're going to go through is the same numbers. So this is a self-employed person that has made $50,000 net profit in the year. They've also got a $2,500 RSP contribution and also $1,000 in medical expenses. Both of these individuals are single. We're not getting into those uniqueness of spousal transfers or children or dependents or any of those things. Really, we're just looking to check out what makes their tax returns and the tax amounts due differently. So what we want to do is we wanted to take a look at these two summaries that I've done. The first thing we're going to go through is just look at the orientation of the tax return itself, and then we're going to look at the numbers. And when I mean orientation, the summaries are taking, you're probably familiar with a whole bunch of pages of your own personal income tax return. So the summaries that I'm going to display, they're going to take all of the line entries off all of those pages of a tax return and just dump them into a one-page summary. So instead of having to flip through multiple pages on a tax return, we're just looking at the sum total. Here are all the line entries of that tax return itself. So we want to be able to understand what we're looking at. So I'm going to just do a screen share. Just want to make sure, did I get, no, I didn't. Okay, so did I get that? Paul, can you come back and just let me know if it did show?
Yep, you're good.
Perfect. Okay, sorry, I didn't, my little green line that went around the outside vaporized, so. Okay, awesome. Okay, so what we want to look at is the structure of the tax return itself. So again, this is just a summary. This page is kind of big here, so I'm going to talk about quadrants, and I'm going to show you what I mean by a quadrant. So up at the top left here, we've got a section that deals with all of the income from the individual. I'm going to scroll down. When we get to the bottom half of the left-hand side of the screen, we're looking at tax deductions. That I'm going to call quadrant 2. We're going to go up to quadrant 3, which is the top right up here. And this is some tax credits that are possible on a tax return. And at the bottom, we're going to go down and we're going to look at how much is actually owing or what the refund is for the individual. So again, that's just the orientation. We're not talking the numbers of this particular individual yet. We're just looking at the orientation. The top left is going to show all of the income from all of the sources. Bottom left is what are the deductions from that person's tax return. Top right, what are the tax credits that apply to the person. Bottom left is going to be, let's get to the bottom line, how much is due or how much am I going to get back. So with all of those things that kind of show how the tax return works, again, this is just a summary of all of the pages of your tax return. We're going to look at, go to the top here, this is our employee. This is a test return for an employee that earned $50,000 income on a T4, a regular T4, for the year. So the top, what you're seeing here is here's the $50,000. You'll see that it's included in employment income line. As we scroll down, you can see here's all the other ways that people can earn income, and it all gets stacked up into this bottom line here on line 15,000. This is total income. So if this individual had had a bunch of other income streams, it would all get stacked up into here to show how much income they made. So now we're looking at this individual, $50,000. We're going down to that bottom left quadrant where here are the deductions. This individual's got an RSP contribution for the year of $2,500. So we've got $50,000 in, $2,500 for that RSP contribution. It is deducted straight off the top. We're not going to get into CPP adjustments at this point. We're just going to say, here we are, $50,000. We're knocking off $2,500, total income of $47,000. And then one more little section down here. This is again some unique things like capital losses or other adjustments that could take place before we start calculating tax. I'm not using this on the example today, but really we want to go from $50,000 of total income minus some deductions. And the important line here is now we're into taxable income. So this individual is going to start with the tax calculations based on $47,000 because they're not paying tax on the $2,500 they put into an RSP. We go back up to the top, this top right quadrant, then we've got some tax credits. A tax credit is different than a tax deduction. A tax credit is an allowance to offset taxes owing. You might be familiar with medical expenses or donations, but there's a whole bunch of other things in here that could earn an individual some tax credits. So again, we're only using a simple example. We can't go into all of these complicated things, but you know, disabilities and student loan interest and tuitions, they all come into this tax credit section. The interesting thing then is we get down to the bottom line and we want to see how much tax does this person owe. So in this section, we've got based on the $47,268 of taxable income, this individual owes $4,300 worth of federal tax. They owe $2,200 worth of provincial tax. They owe $6,500. They have already paid $7,400 because they're an employee and they've already had payroll taxes deducted from their pay as they've gone through the year. So because they owe $65 and they have paid $74, we've got a refund coming of $817. So that one is just kind of showing the easy examples. So here we've got the employed person. They're just getting a tax refund at the end of the year. So the comparative that we want to do is we want to go over to the self-employed person who has also made $50,000. They also have the $2,500 RSP contribution, and we want to look at the differences. So in this top left quadrant where we had the other person had their income was recorded with employment income, this individual is going to show $50,000 in business income. Don't have it. No, I don't. Yeah, I do. Okay, I'm just going to flip over quickly to a statement of business income to show where that came from. So I just did a super quick example. I've got my consulting business here just to show you the pages that are going to be attached in your tax return. The total sales that I had generated for this example for the year, we've got $75,000 of total income that came in. Then we were allowed a bunch of expenses, so advertising, insurance, office expenses, some rent. I've got $25,000. So we're just showing that what we're looking at on that line that said we earned $50,000, what we're showing is the net income minus our allowable expenses gave me $50,000 for this example that we were looking at. So this 50 came from that schedule I just showed you. We're only paying tax on the bottom line after our expenses. So total income here, same amount. We still have an RSP contribution that is being taken off the top. But one of the big differences here is that the self-employed person is allowed to deduct $2,700 worth of Canada Pension Plan contributions. One of the differences between employed and self-employed is that when you are self-employed, you have to pay your Canada Pension contributions. They're mandatory and you pay them on your tax return, whereas an employed person has their Canada Pension Plan contributions deducted off their paycheck. So when it comes tax time, the self-employed person does have an allowance or a concession for the fact that they're going to have to pay these Canada Pension Plan contributions. And when we scroll down and we look at that comparative, you will notice that the taxable income on the self-employed person is actually quite a bit less, $2,700 or so less than that employed person, because we don't pay tax as self-employed people on our contributions to CPP. Flip over, yes, we've got some more credits. We had the same medical credits. So now we want to skip to the bottom line, and this is where it's very dramatic. So now we go to the bottom and we go, hang on, our employed person was getting $800 back, and our self-employed person, holy cow, has got $11,400 in tax to pay. That is a very dramatic difference. Now I've done the math, of course, and while yes, there is a difference, it isn't really a $12,000 difference. It really is about a $1,400 difference altogether. So I'm going to bring another spreadsheet up here. Okay, so I don't want to get into the weeds of what an Excel spreadsheet is going through and showing you. What I just wanted to go is I've got it put into, here's the employee, here's the self-employed, and we're doing it just as a comparison between, yes, we still have the same income. We want to see why that bottom line is different. We still had the $2,500 RSP. We still had some CPP adjustments in here. We had our taxable income. But what we wanted to look at was there was that difference of how come our employee has $800 coming back and our self-employed person is going to owe $11,400 at the end. So the tax return result, when you look at it, it does look massive, but it really isn't all that different. It's, like I said, it's I've got a little box down here, $1,400 different altogether. So what you need to remember is the employee has already paid their taxes as they've gone through the year. So when they got their paycheck week after week after week, they were already having their Canada pension, their income tax, their federal tax deducted. Whereas when a self-employed person is earning that income, quite often it's erratic, it's not so regular, and quite often they're not prepaying their taxes the same manner as an employed person is. Pardon me. So when we're looking at these numbers, you'll notice that you hopefully will notice that the federal tax for a self-employed person is actually a little bit less. The employee paid $4,300, the self-employed person $42. Ontario tax, again, is a little less. The difference is that mandatory Canada Pension Plan on self-employment is tacked on to the tax return itself. Whereas when you, as I said, when you're an employee, there's two things that happen. One is you're paying your Canada pension as you go along, but an employee also has a subsidy, so to speak. Their employer is already paying about half of their contribution. So because their employer is paying it, paying half and they're only paying the other half, but it's already prepaid, it really shows with this dramatic difference on the bottom line on their tax return. And this CPP on an entire year's earnings that gets tacked onto a self-employed person is usually a pretty big surprise to that person when we start talking tax returns at the end of the year. When you remember that the employee also paid unemployment insurance by payroll tax deduction, the self-employed person isn't paying unless it's a different conversation as well. What you want to do is you want to compare all of the total costs, and the total cost, I have done a little summary down here. The employee over here is only going to pay $2,500 total. The self-employed person is going to pay $5,000. But when you look at the fact that the employed person has paid $2,500, they've paid $800 of EI, they've already paid $6,500 of tax, they've already paid, as they've gone through the year, $9,900 for this specific example. This person has got to pay $11,400. So when you look at all of the math, how much was deducted, there's only $1,400 difference. And yes, $1,400 is still a lot of money, but that really is what makes up the difference between these two individuals. Just want to go back to my other notes here, sorry. I think what the solution is then, when you actually look at it and you can see that there isn't a huge difference. There is a difference, but there's not that $11,000 difference. It really is, as a self-employed tip, I guess it needs to be self-management of your money. The solution for a self-employed person to not have that great big shock of an $11,000 tax return at the end of the year is really to just recognize that there is going to be tax. When you worked for somebody else back in the old days, your taxes were already prepaid as you went through the year. So recognizing that, yes, there is going to be tax. Yes, you need to get really, really good at cash flow management. And it is important to start paying regular tax installments to CRA so you don't have that big tax pain at the end of the year. So this self-employed person, there is a line in here that, deducted at source. This line was populated for the self-employed person, but down here we've got a place where we can fill in that you've paid installments. If that individual had started prepaying $1,000 a month towards their taxes as they went through a year, we would have had an installment paid calculation in here. And then they still would owe $11,400, but they would have prepaid, $1,000 a month, $12,000. So they would have gotten a small refund with that as well. So that solution, recognize there's tax, get good at cash flow management, and pay your installments so there is no tax pain at the end of the year. You're still in the same position as the employed person. Another thing is just educate yourself on what tax deductions are available to make best use of them. And consider RSP contributions as well, because it is super hard for me to be having a conversation with the person at the end of the year to say, well, you've got $11,400 worth of tax due. If you put an extra $5,000 into RSPs, you would have saved yourself an extra couple of $1,000s at the end of the year. Pretty tough to be looking at that tax bill and start making a thought process of whether or not it's time to put extra money into an RSP, because it's all money out of your jeans. Another solution, I think you'd call it, would be to just make yourself knowledgeable of what tax deductions are available so you can make best use of them. If we went back to that statement of business income and expenses, I mean, this is a list of all of the different potential deductions that you have available to you as a self-employed sole proprietor. You've got a place for office expenses, for rent, for property taxes, travel, utilities. There's lots of things that you can deduct from your income. So just make sure that you are aware of all of those things that you can deduct from your income. So summary, what we looked at so far, we looked at how a tax return is structured. We've looked at how deductions like RSPs and self-employed CPP contributions can affect your taxable income. And we've looked at how self-employed taxation is a little bit different than employed taxation. But the real point that I want to cover is anytime you're doing a tax return, it really is just a giant reconciliation between what you owe and what's been paid. So when that the employed person got a refund back at the end of the year, it wasn't any gift. It was simply just the government is refunding an overpayment that has been made on your tax account as you've gone through the year. So when you're getting a refund back, if you get a giant refund, some people like a giant refund at the end of the year. All it means is that you've giantly prepaid your taxes for the year and you're getting that back. When you owe money at the end of the year, it means you haven't paid enough. If you have almost nothing in the middle, it means that you've been very balanced in your approach to taxation. You've paid about the right amount for the year. So having it be almost nothing, plus or minus a couple of $100, you've done really well with your tax planning for that year. Large refunds, large payables just mean that you're out of balance when you're doing your payments. Okay, so when you're self-employed, I mentioned before that great bookkeeping and knowledge is important. So if you've either got the time to invest into learning and understanding what your tax deductions are, you can hire a professional service. Hey, that's what I do. But they can work with you to keep you paying the least amount of tax payable, because they're going to help you with that knowledge of knowing what you can write off and what you can't. So in the resources section, I've got some links to some really good free CRA educational resources. There's a lot of education available for them to help people educate themselves on what they can and can't do. Probably my biggest tip would be to not think that tax rules and tax deductions follow logic. So what you can and you can't do is pretty clearly outlined by Revenue Canada. And to survive an audit, you need to follow the rules. Not what you think may be logical for your business. It really, really is a rule game, and you need to follow the rules in order to not have any nasty surprises at the end. And I've had clients that think that they can, expense their haircuts or their clothing or their car, their spouse's car, and even their daycare. They'll say, hey, I have to put my kids in daycare so that I can work. Well, there's another place to deduct daycare. It's not because you have a business. So keeping in mind that it is that rule game, but there is some gray spots. If you play nicely, an audit will go well. I also included in here this information that I just pulled off the CRA website. It's 8 things to remember before you file your tax return. This was just published last week on the 18th. And, there's some tips in here I just wanted to kind of bring forward so you can take a look and see what might be helpful for you in your own tax return filing. Filing your tax return on time, that is super important, because late fees will always apply. And there's some sneaky rules. So I have people that don't care if they file because they're going to get a refund. So therefore a penalty doesn't apply. But just keep in mind that it still is documented at CRA that you're late. So then possibly a year in the future, you do owe money, you're late. They've got the ability to apply a different penalty structure to you because you have been late in the past. So there's just a couple of things in there you want to make sure you file on time. Let's see, what else have we got? The next one that I wanted to go through. Oh, file online. So getting refunds faster and avoiding delays, you want to sign up both for direct deposit and to be able to file your return online. We e-file all of our clients' returns. There's lots of softwares that will allow you to file your tax return electronically as well. But just keep in mind that if you are going to do paper means somebody has to touch that file and deal with it. Paper is definitely going to take longer, and sometimes they can take a significant amount of time to get them filed. The next third of their 8 topics to claim all your benefits. Again, not going to go into it, but there's lots of deductions, credits, expenses. Quite a few of them are listed on here. This is a clickable document, so you can go through and explore some of these. Home office expenses is big for the COVID-19. Motor vehicle and business use of home. There's lots of things in here that are helpful for you. Enter your income and COVID-19 benefit payment amounts. So this one, if you keep in mind that CRA already has a lot of information on file for you already, failure to submit some of your information does result in some more penalties as well. So make sure that you have included all of the information when you file your tax return, because what happens is your tax return is going to be processed according to what you file. And then they've got a program that cross-references what you filed with what was provided to CRA on your tax file from any employers or any other sources of income. And they match those ones all up. And if it turns out that you have not included all of your income, it's going to be reassessed and you're going to have some potential penalties that apply as well. It's reminding that tips and gratuities are also taxable income. So there's a lot of good information in this this document as well. Make the right claims. Make sure you know what you can and you can't claim. There's lots of mistakes every year, so there are some common adjustments in there that they're listing as well. You can change your return electronically now with our refile program as well. This number 6 for simplifying your life with my account is even more important. So this is where you would proactively go and set up an account with CRA so that you can just go online and you can see the status of your tax returns. You can see what your account balance is. There's lots of information you can do with your My Account, but it's even more important to get yourself registered with My Account this year, because starting next year, notice of assessments, they're not going to be issued by paper anymore. So when you file your tax return this year, you will get a notice of assessment, but after next year, you won't get one. And the only way you're going to be able to get it is to go on and pick up your own with your online account with CRA My Account. Pay on time. Of course, they want you to pay on time. There's interest. Keeping receipts and documents. Again, if you remember that when you file your tax return, it's like it's an honor system. You're just shooting off to the government a whole series of numbers, and they've got the right to come back and say, okay, here's some numbers. We're going to do a test run. We're going to just check and make sure you've got all your receipts that can support that claim. And you need to keep that for a long period of time. So if it's 3 years later when you get the request to support some documentation, you want to make sure you actually have all of those receipts kept. And then there's lots of more resources as well. So on that last topic, just remember that CRA can always go back and ask you for that documentation. It's important to keep. I think the last thing that I've got in here, and I don't want to go through this at all line by line, but this is just a newsletter that I wanted to include to share with you as well. Table of contents here, we've got some tidbits, we've got some tax credits, some specific information with the COVID-19 business supports, some targeted CRA line audits, I call them, some information about the some tax credits that came out this year, information about old age security clawback, how you can actually have to pay back your old age security if you are eligible for old age security and you've got high income. So tons and tons of information that's available for you, but that pretty much ends the rapid fire dump of information that I've brought for you today. And I guess I'm just going to stop my screen sharing, and Paul, if you want to pop in if there was any questions that came up, then we can move on to that.
Yeah, I don't have any questions in the Q&A at this point. So if anyone has any questions, please feel free to pop them in there. That was interesting. I you know, there's a bunch of stuff in there. We discussed a little bit before the, you know, before we went into the presentation, by, you know, the situation I was in kind of thing. And that whole CPP thing being added on, it was a bit of a surprise, right? So, yeah, I think it really illustrates the benefit of, you know, I accessing a tax professional that can actually help you, and not necessarily just in tax preparation, but in tax planning. I think that's the key, right? The planning component is so important, you know, to know exactly what you can claim, what you can't claim. You know, there's so many business owners out there that think they can write off everything. Every meal is at 100%, and then they get this huge shock at the end of the year when they find out that they could only claim their portion of whatever a meal was when they were out, and not whoever they were sitting with, or, you know, and they didn't clearly document what the meeting was for and whether it was business related. Auditors don't like that stuff, and you're going to lose every single every opportunity. So, you know, and again, to not necessarily get too aggressive with the way that you go about those things. Everybody has to pay taxes. When you try to, you know, try to slip the system, you know, it may work the first year, but you're going to get nailed at some point, and it is painful. So, a good accountant's not going to let that happen to you. They're going to be firm but fair, and but also know the tax law so they can maximize your opportunities, right? So, I guess
that's exactly what it's about. It's not, you know, there's so many. I mean, on those lists that I show, I know there's so much information. You can't go into all of it, but there's a lot of opportunities for valid deductions. So let's see what applies, and what applies to me isn't going to apply to you.
Right.
So you do need to have that level of knowledge to be able to figure out what applies to the individual taxpayer situation.
Right. It's situation. I mean, even things like vehicles, if you need a vehicle to do your job, should you be leasing it or should you be buying it? What's cost,
Yep.
Capital cost allowance? Is there, how long do you think you're going to have the business? How long do you think you're going to have the vehicle? How should you be writing that down? And what can you actually claim on it? I don't think you can actually claim fuel costs. You can do it through mileage, I believe, right? But you can't claim it directly other than.
If you're a corporation, you can do mileage, but if you are a sole proprietor, then you've got to keep the mile logs and you've got to keep, ready to go. It's detailed, but there are some really great apps out that have just absolutely transformed. I mean, quite often people just couldn't be bothered keeping a mile log when you had to pull out that little booklet and write down every time you turn the key.
Yeah.
Let's start writing something down. No, it was really painful to do. So a lot of people didn't bother doing it. But now that there's the apps, it's awesome. People can just flip through those and it makes it a lot easier to claim. And the cool thing actually is the apps will say, this is about what this is worth to you.
Sure.
And when you see it visually, it's like, wow, that was worth $200.
Yeah.
It really helps do a reinforcement of how important it is to keep those records.
Yeah, and I think even for employees, I mean, if you're non-reimbursed ones, that T2200 is a super important document in there as well. If you're not getting reimbursed by your employer, there's still ways that you can take advantage of it. I think there's a misnomer out there as well about how self-employed are able to save so much and don't have to pay the taxes, and that's just not true, right? I mean, everybody has to pay their fair share. You just have more opportunities to find those deductions if you've got somebody that's in your corner that's good at what they're doing. So maybe I want to talk a little bit about what happens when you get behind. I know you covered off on a little bit on that, but what are some good practices if you through COVID, and I want to touch on COVID a little bit because I think it's more relevant. COVID certainly complicated taxation, I think, with all of the different SUs and SIRs and how you were going to apply those things. How have you guys been navigating that? And if you are behind, what's the just stop the pain right away, I think is the best advice. But how do you recommend going about doing that?
Well, I'm actually going to start with one of the changes with CRA right now is that they're going to. I think at the beginning of COVID, it was like a free-for-all. Nobody had a map. Nobody knew how to navigate this, including the government. So there was just a lot of money that was just going in different directions without a lot of accountability. And now one of the changes they're putting in is that for individuals that are behind on filing their income taxes, there is not going to be the access to the programs, which is definitely, it sounds logical, but it is a difference. So that is coming into play. So it's going to basically force people to start catching up. But what we talked about earlier is that I have had several clients this year that have been past clients that just walked in the door this year with multiple years of paperwork. And what had happened, I think, is that during COVID, CRA was just kind of backing off sending out the notices. I call it hate mail. So they weren't sending out as much hate mail and trying to get people to start filing. But then once things started to get kind of back under control, the audit activity is back and people are getting letters. They're getting non-filer letters. They're getting assessed. I mean, if you haven't filed your corporate tax return or your personal tax returns, any of your returns, HST returns, they will just assess you. And you'll get a notice that says you owe $100,000 or some ridiculous number that is outside of anything that you've ever dealt with before. And all it does is it kind of highly motivates people to make that call. Because all of those big assessments, they go away once you file your actual numbers. So they just take the dart out, throw it at the wall and say, well, we're going to assess this person, $30,000 a year, and they're 3 years behind, and I add some penalties and interest on, so whatever. And it's just an estimated number. I don't know where the estimates come from, but they'll pick a number, assess that the individual gets this hate mail and calls me going, oh my God, the government says I owe them $100,000. There's no way I owe them $100,000. What do I do?
Yeah.
And, you know, the answer really is you got to file your paperwork.
Yeah.
But the other part of that is communication. So if you do get a CRA call, if you do get that individual, whether it's, there's two different calls you can get. One's compliance, one's collection. Compliance is the person that says, well, you haven't filed anything. Get your act in gear and get the paperwork filed.
Yeah.
The collection person is the one that wants your money. And
Yeah.
they want to know, when can you pay? What are the terms that we can negotiate? How are we going to get this debt cleared? And sometimes the collection person is calling on after the compliance person has said, we're tired of waiting for you to file your tax return. So we're going to just take the dart out, throw that number and assess it. So you can get collections calling on that $100,000 that isn't real.
Right.
So that's the overwhelm. And really the answer to that is being in contact with the ideally the compliance person.
Yeah.
Before they close your tax return.
Yeah.
To say, hey, it's COVID, I'm behind, or hey, I was sick, or whatever the reason is. But then they're just going to want to negotiate a date with you on when can we get this paper brought up to date. And then if you don't honor your commitment, then they're going to be cranky, we'll say. But really, I mean, if you're behind, talk to them, make arrangements, get it done.
Yeah. Yeah, no, I totally agree. It's I call them the Heartstopper letters, you know, with the it's the guy with pay up sucker on his palm, and they're saying, hey, how are you? Yeah, that's they're not great calls to have, but
No.
you know, again, it's sort of unprecedented times, and I think that you know, obviously using professionals to help you sort of navigate that is certainly the way to go. You know, being a small business owner, a sole proprietor is terrifying enough that when you and you're going to make mistakes. I mean, that's what happens there. You know, there are a series of books I look at on a regular basis called you know, the E-Myth, and it's this. I want to start my business because I love cooking, right? And then you find out that really it's not about cooking. It's about, you know, tax filing and everything else that goes into running the business and everything but what you're really passionate about. And the advice through those is, you know, find your sweet spot, find the things you're good at, and get rid of the rest of it. The money that you're paying out for those kinds of services is money well spent. I mean, ultimately, it's a cost of actually operating a business, and if you look at that way, then it's a little less painful. So,
well, and you also, I'm going to reframe that a little bit too. That, you know, if you're paying your accounting or your bookkeeping professionals to get your record keeping done, you know, they're probably going to save you more than their fees because they know what it is that you're allowed to do. So it's not a cost, it's an investment.
Absolutely.
You know, and plus the other thing is you also don't want to get those the brown envelopes that show up in the mail that says, hey, we want to check XYZ and have you possibly made an erroneous claim because you didn't understand how it worked.
Yeah, exactly. And that's, you know, quite often that happens. Unsuspecting people that think they've done the right thing. And then it turns out they made a clerical error and off they went, right?
Or they applied logic.
Yeah.
You know, when you're supposed to apply the rule, not the logic, you know?
Yeah. And I think even from a business planning standpoint, budgeting and making good business decisions, it's always better to do those things with facts. You know, if your business is struggling, you know, in some cases, and I mean, we always talk about businesses that are doing great, but the reality is a lot of businesses, especially in the first few years, they're making lots of mistakes. They have no clue where their operating costs are, you know, where their overheads are, and you know, the P&L looks good because everything's fine, but their balance sheet is a mess. They don't understand the difference between the two. And they're not cash flowing, and ultimately what they have is a downward cycle because of sales or whatever, and they could be heading over a cliff. A good accounting service is going to, you know, hopefully identify those things and say, something's off. Did you lose a client? Did, you know, what's, you know, have you changed, you know, you need to change your business model, something shifted. And quite, you know, again, if you're so focused on running your business, you may not see the forest for the trees. And those kinds of professionals can help you to identify that, right? So.
Yeah, something that I noticed that a lot of times, especially for somebody that's new in business, is they tend to look at their bank balance.
Yeah.
And if there's money in the bank, woohoo,
Yeah.
we're all good. But the bank balance isn't really a good measuring stick because
No.
it doesn't take into consideration things that you haven't paid for yet or money that hasn't been received. It doesn't tell you that somebody hasn't paid you in 3 months.
Right.
you
Yeah,
know
exactly.
so but it's very, very easy for us, especially for somebody that's brand new in business who's got so many hats to wear and it's so many things to do and so confusing. It's very easy for that individual to keep one eyeball only on, they've only got one eyeball left, and that's just sticking with how much money is in the bank. And that is not a good business management support.
Yeah, no, it's not. Absolutely not.
Yeah.
So there was a question that popped up. Thank you for the advice during the session. Felt like I learned a couple of tips. Is there a specific hub I can access to stay on top of new laws or regulations? Maybe that's new tax law or those kinds of things. Like, how do you stay up to date, on new legislation, regarding taxation?
Well, as a professional, I subscribe to a lot of professional agencies that help me with myself keeping up with everything. And then I'm also super fortunate because, when we mentioned earlier that I'm part of a franchise group, I also have my franchise company and plus the other franchisees kind of as a group. So we keep each other up to date because things change all the time. But, for an individual, just staying on top of there's so much information that the Revenue Canada CRA website, canada.ca now, they've got so much information on changes and updates that go along. It is a wealth of information. So that's one place to just stick with. And of course, there are organizations, of course, like the Chamber and Canadian Federation of Independent Business. There's lots of these agencies that are out there that can help. But then that educating yourself along with your professional is, because they can help guide you with your unique needs. That's important as well. But yeah, there's tons of information. I love it when my clients are caring and involved enough to be paying attention to all of these changes, because then we can work with them and make sure that it applies properly to their situation as well.
Right. It's either not a surprise, but also something that they, maybe start making, proactive moves rather than waiting for you to tell them what to do, which is always good.
Yeah, that's awesome.
So another question in here, based on our earlier discussion, would you say that tax deduction would be better than a credit? I think credits are always better because they're a little less
straight
work,
up deduction wins.
What's that?
Yeah, a straight up deduction wins though. Like a credit just goes against the taxes owing, whereas a deduction, if you put that $10,000 deduction in for an RSP, depends on your tax rate, of course. If you're in a high tax rate, a $10,000 deduction could save you $5,000 in tax.
Right.
So if you frame it as, that $10,000 went out of my pocket, but I was going to pay $5,000 on tax in that. So it's almost like there was a 50% off sale on your RSP.
Right.
You still have a $10,000, money in the RSP, but you save $5,000 out the other pocket.
Exactly.
So deductions are good.
Yeah.
And the tax credits are going to just apply against the taxes owing.
Yeah, and a tax credit quite often comes from a government program that you're gonna pay for later down the line, anyways, in some way, shape, or form. Yeah. So
and that actually just kind of outlines. We talk about complexities. We talk about tax credits. You could be talking about tax credits that we outlined today, like medical credits or those things. You can be talking about tax credits that are through other subsidies and funding. So it's really super good to be clear about what the definition of the term is, because it can apply to different things and just make it more confusing.
So you touched on we've mentioned medical a couple of times. Can you sort of touch on that and how that works? We've got a few minutes left, I think. Yeah, we're good.
I think because it actually it's more complicated than one would think, because it is it's based on a lot of factors that we talked about the uniqueness of an individual, because it's based on there are credits that are available, but it is also dependent on what the household income is, whether it even applies. So I believe in the examples that I used today, I did bring up tax credits for medical because it is a common one that a lot of people use. But for the $50,000 example, for both the people that I used in the example today, the $1,000 didn't even get them a tax deduction.
Yeah, I think
Didn't give them
I think you
a
have to
credit.
excuse me, I think you have to get to like 2,500 out of pocket above and beyond.
So yeah, so that exactly. I mean, there's rules that say it has to be this, but it has, or it can be a percentage of the income. So what I normally will tell clients is keep all of your medical receipts, because when you start the year January 1st, 2022, you don't know today if you're going to end up with a root canal. You don't know if you're going to end up, maybe you will usually only have $500 that does not give you any kind of a tax reduction at all.
Right.
But this might be the year you have laser eye surgery.
Yeah.
I don't know.
Yeah.
So just keep them all, because I will never know, or you will never know, whether or not it's going to make any difference at all until you get to the end of the year and you see what your actual totals are. So again, it's just record keeping is always important.
Yeah, and again, record keeping, I could do a whole, that's another box of darkness. Yeah. There's those that say that, get rid of stuff, and then there's others that have been audited and CRA's asking for 10 years worth of data. And you're like, well, I'm only supposed to keep 7. And then, they don't care. They want to see it. So yeah, tax records are super important. And again, when you're bringing in boxes full of stuff from 2017 and you can't remember how that year went down, I can't remember what I did yesterday, but trying to provide explanations, you're probably in some cases going to lose money, because it may be better to just not claim it because you can't back it up, right? So keeping everything is super important. So, and you mentioned a few apps that are out there. We use an app that called Dext here in order for taking receipts in and getting stuff into QuickBooks. That's something that's new for me that I'd never used in the past. But what a game changer that is, where you don't have to, you just take a picture of it and in it goes. And if you're not making an investment in some of that technology, whether it be maybe a quick scan or whatever, I would strongly advise that you use those and whatever your bookkeeper chooses as a way of communicating. Saves you a lot of time.
Amazing progression in technology that just are, like I said, is game changers with getting your record keeping done. I'm going to circle back though to Dext, because you do have the ability to take those pictures, but just make sure you look at the picture before you submit it, because a lot of stuff
you got to verify the information before you publish, for sure. It doesn't class correctly, but
or even if it doesn't have, like, if you're claiming credits, HST credits on a receipt, the receipt's got to have the vendor's HST account number on it. And if you take a picture that it's bent over and you don't have that information, they're going to disallow some of your credits. Or there's lots of things that can go sour with a photo. So just make sure that the picture is good and clear and has all of the information before you publish.
Again, but sitting in the car taking a picture of that so it doesn't get lost in my glove box.
That's awesome.
You don't have the giant shoebox of receipts to give to your account. I think I don't know. And remember, when you buy that bookkeeper a bottle of liquor at the end of the year, keep a receipt for it, because you can probably write that off as an expense, right? Anyhow.
And it's appreciated.
Yeah, for sure. All right. Well, I appreciate your time today, Nancy. It was it's always great to talk to members, and obviously Andy's your partner's involvement in the chamber has been is greatly appreciated. He's a wonderful guy. He speaks very highly of you. Every other word is, well, Nancy this, Nancy that. So it's great to actually put a face to the name, and we certainly will invite you back again. I think once we get a little more into next year, we want to get back to getting into some programming that makes a lot of sense for businesses that isn't involving COVID and crisis management. I think we have to get a bit more progressive.
I'll be glad to get past this.
Because I think we all will.
It's been too consuming for too long.
Yeah, for sure. But then again, this is access. It's a way to getting great information and to keep it and archive it. Useful stuff that so there, there's some great advantages that we wouldn't have had in our past chamber world, where we have to wait to actually do a live event and there's a cost involved. I think this is a great addition and something we'll continue to do. So in closing, I'd like to again thank you for sharing your expertise and insight today, and I'd like to thank everyone that watched today or will watch in the future for your contributions. Now that we're starting to come out of COVID and the restrictions are lifting, we're getting back to business. Stay safe, make good personal choices, and again, if you need anything, the Barrie Chamber is here obviously to help you with any information or connections, anything you need. Just feel free to email us. And we got a couple things up and coming. Our chamber chat networking is next Wednesday at noon. Always a great thing to come to, kind of fun, get you out of your normal business. And we will be back to live BA5s coming in April, which is exciting. And we have our Women in Business Awards on April 27th as well. Tickets are on sale now, so you can go into to the website and actually start buying tickets for that. They will sell quickly. We don't have as many seats available as we normally will. And we've got lots of other exciting things that are kind of in the future. So please stay tuned. You will also see, from an accounting standpoint, a change in the way that we actually invoice. So we started to use our new system, our new backend system, to start doing our annual renewal invoices. So you will get logins for that new site very soon, and that will make things a lot easier as we are going to be more into the subscription basis, where we will just auto renew, which is new for us and something that we're going to bring forward with some documentation in the very near future. Still have the option to not renew, but at the same time, it's just going to make things a lot less complicated for all involved, and we can spend more time focusing on programming and doing the things we need to, and less on accounting. Sorry. Anyhow, having said that, have a great day, and we will talk to you very soon.
That's great. Thank you very much.
You're welcome. Bye-bye.
Okay, bye.